Guys, welcome back to Kryptonite, because I believe that cryptocurrency and the blockchain are the kryptonite of our modern financial system, and I love it. Guys, there is so much going on right now. Bitcoin is literally pumping as we speak. I know that you're looking at the monthly time frame, and that pump doesn't look as intense as it is on the lower time frames. But guys, Bitcoin has been pumping hard. I'm going to show you exactly the pattern that played out. And I was able to actually scalp a couple of winning long positions, just real quick ones where I was like, I knew that the price target for that longer term pattern was at a certain area. And so I just knew like, okay, I'm kind of safe buying in wherever because I know it's going to eventually hit that price target. And so I was able to scalp a couple of long positions on this. And I'm currently waiting it out because I think we are due for a retracement on the smaller time frame before I'm gonna jump in again, because I think this could be the start of a pretty nice rally. And this is one of the scenarios that I talked about being possible. And on top of that, I actually went ahead and bought more Bitcoin. I usually try to buy Bitcoin, maybe once every couple of weeks. And if you guys have been watching my videos, you know that I bought Bitcoin a couple of days ago. But based on what I'm seeing in the charts, I was like, I need to buy more. So I bought more a little bit, sooner than I normally do. But it just looks very juicy, very, very juicy right now. And you know what? Honestly, getting at these levels, even if it does drop more, that's fine. I think it's still a fine level. And this is for my long-term holding. It's a possibility that if we, have a nice pump, I might take a little bit of profit on it. But it's definitely more of an investment long-term trade for sure. Very like long-term swing trade kind of thing. So I don't usually touch it too much, just try to accumulate at good prices. And I just felt like this was a good price. So we are going to jump right. Well, actually, before I get into the charts, let me talk to you. So there was some news today, the Fed, and specifically, and before I go into this, guys, make sure to smash up the like button, hit subscribe, because I think YouTube, when I cover certain topics, they block my videos, because I've noticed the last couple of days I've talked a little bit more about what the government is kind of up to, and all of a sudden my views like dropped. Like even though I was getting 30, 40 views a video, now it's like nothing, like 3. And I'm like, that is weird. I think it has something to do with, the algorithm kind of seeing what I'm saying and then blocking me. So really need your help. Like, subscribe, really helps me out. I'm not a financial advisor. It's not financial advice. Do your own research. Entertainment purposes only. The usual. So with that being said, Jerome Powell came out and basically said, and I'm not going to say word for word what he said, but I'm going to say what I think he sort of said the way I'm paraphrasing, which is basically it would be un-American to have a CBDC, or at least certain types of CBDC. And he touched on privacy being very important and it being very, quote, un-American if we are, every transaction is spied on by a CBDC. So that was very cool to hear that from someone in that position of power. It was nice to hear someone who's got some common sense, who understands, America was founded on certain principles. Us having our money tracked and the government knowing every purchase that we make and being able to have control over what we purchase and different things like that it could lead to is very un-American. I mean, it's literally the opposite of the Constitution and the Bill of Rights and what this country was founded on. So it's good to hear someone in a big, in office talk about that being un-American. It's very un-American. That is China-like. Unless we want to become like China, we need to not do that, not have a CBDC. And if we do, which again, they can say with good intentions, we're going to have a CBDC, but don't worry, we're not going to use it for these nefarious means. But then again, if they're given the power to do that and the control to do that, sure, maybe whoever's in control of it right now isn't going to use it for nefarious purposes, but who knows, the next Joe Schmo that has the power over that, they may not be such a good character and they might abuse that power. So I don't think we should give away that freedom, that financial privacy that we all Americans have a right to, and the founding fathers would be literally rolling in their graves at the thought of a CBDC run by the central bank, rolling in their graves. Literally the most anti-American probably thing that we could do, or one of the most. So anyway, guys, like and subscribe because YouTube's probably going to block this video now because I mentioned those things. Anyway, let's jump right into the Bitcoin price. As you can see on the monthly, we held this nice support here, and we're printing right now a nice juicy monthly candle. But again, 21 days left. This still has a long time to finish. But right now, it looks like a juicy hammer candle, baby. Gotta love those hammer candles. Usually appear at the bottom of trends, and they signal a trend reversal because you got all that buying pressure pushing it up. After all the sellers tried to push it down, the buyers pushed it right back up. So very, very beautiful looking candle. But again, a long time before that finishes. But we're getting a strong, strong support here at our previous all-time high. As you can see, this blue line here is my potential bottom. And on my last video, I talked about two scenarios. So go back and watch my last video. You can see exactly what scenarios, the two main scenarios that I had playing out, and scenario one might be playing out here potentially. So let's jump down to the weekly again. We want to see that higher time frame. So we did have this bear flag that we broke down, but we immediately got support right here at about 18.5, which coincides with a candle wick down here and a candle wick right here. So a lot of support in this area. So no surprise that we also were printing a nice bullish divergence. Sorry to switch charts on you so fast, but as you can see, we made this low here, right? And then we made this higher low right here on the RSI, even though this is a clear lower low. So this is a bullish divergence, meaning that the bearish pressure is coming to an end. And usually after a divergence, you do get some sort of consolidation, and it doesn't always mean a reversal. It could, you could have multiple bearish divergences. As you can see, we had one pretty much. Do we have one right here? We did not have one there. Let's see. Actually, let me jump on a higher time frame here and see if we had any significant divergences here. So we did have one right here, right? A bullish divergence. Now we didn't reverse, right? We consolidated and then we broke down again. But now another one, right? So two in a row. And now you can see we are pumping nicely from this second divergence. So one divergence doesn't always, it can just mean a sort of pause in the bearish momentum. Once you start getting multiple divergences, that's when you can start to say, okay, I think a reversal is coming. And I'm pretty upset because I literally just missed the bottom. I took a trade. If you watch one of my last videos, I took a trade and I had my wick or my bottom below this wick candle because we had the support here. We had the falling wedge, which I've been talking about a lot on my channel, and I got stopped out. And I unfortunately did not make a second attempt. I should have gone with the second attempt right here and then, did a second try, and then I would have caught a very, very strong move. Now, as you can see right here, we started making this cup here, and I think honestly, you could say it's a cup and handle. You could also just say it's a very strong W. And so the price point of that has already been hit, as you can see, very nicely. So you could also, again, I think it's pretty much the same. It's the same target either way. If you were to call it a cup and handle, it would literally be the same, basically the same target. Yeah, it'd be the exact same. So cup and handle, W pattern, whatever you want to call it, this was a beautiful pattern that played out. As soon as we broke above this neckline, I measured that target out, and that's when I started scalping longs here. Now, obviously, if I could go back in time, I would have just bought once, and I would have just set a trailing stop loss, and I would have just let it keep riding, which in hindsight, I wish I would have done that. However, I did win a couple of just scalp longs off of here. So as you can see, very, very bullish. We hit our price target. We can even pull out the Fibonacci retracement here to kind of get an idea of how far this run could go. And as you can see, we hit the 1618, which I'm sorry that's in black. I constantly switch between black and white charts just for a difference. And so sometimes they're different wrong colors. So we busted past the 1618 right here. So the next target would actually be the 2618, which coincides with a previous, this previous resistance that, flipped into and could flip into potential. This was support that could now flip into potential resistance right at the 2618, right in our little pocket here. So I do expect the Bitcoin price to keep pushing. Maybe it'll kind of go sideways or maybe even retrace a little bit. And I do expect it to come back and interact with this level. And from there, we will kind of see if it's got juice to keep going, because you could potentially on a higher time frame say, hey, look, we are actually at a important level on the Fibonacci's. Once we hit that level, that's kind of in the golden pocket area, the 1618, which would be a potential. We get a potential reversal, right? We get a rejection off the 2618, and we continue the downtrend. So there's a couple different ways you can look at this. Personally, I've heard some people calling this falling wedge invalid. I don't agree with that, because as you can see, we broke out of it and we kind of retested it a little bit, but I think that's more of a, I don't really consider that much of a retest, right? Came down, we retested, a strong retest of the bottom of the wedge, and we had a beautiful reaction. So I do think that this falling wedge is still valid, and there is the potential that we would rally all the way back up to first price target would be right. Actually, let's take a look here and see what the price target would be. So the first price target would be, I need to switch these red ones. Actually, we hit already the first price target of this falling wedge, or we're about to, right, at that level. So we have a lot of confluences here that we would need to sort of break past to remain bullish. So that's price target number one. However, the obviously long-term price target, you'd probably have another price target here, and then you have another price target at the top of the wedge. Now, why I think this has potential to, and this is just, I'm not saying this is going to happen, I'm just saying it has the potential to, if you look at our longer time frame, you can see that we're in this longer falling wedge, which we've all known about for a long time, and we've yet to come back and retouch that resistance point. We kind of were trying to get to it, couldn't get to it. We're trying to get to it again, couldn't get to it. Now, we're seeing these, bullish divergences, right? This one right here, I believe, is because we got a bottom here. We made a lower, maybe not. Okay, no divergence there necessarily. But anyway, we got a nice, potential double bottom brewing here. Maybe now we rally up and we finally get our touch point here on this resistance line that's been, wanting us to come back and give it a nice little touch. So I think that has the potential to do that. And if it did, that would be potential retracement. Let's say it's not going to go up in a straight line, right? Let's say it comes up, maybe retest this line, comes up again, battles here. So maybe by the time we get to this line, we're also at the 382, which is another key Fibonacci retracement level. And so that could be a perfect confluence of getting rejected down to continue the bear market. So definitely watching this going from level to level. I'm going to look for more potential long positions up to this level here on the very short time frames. I'm always looking at the 1 minute for opportunities to scalp. So I'm going to be looking for opportunities in this little gap right here. But then I'm probably going to be looking for, potential rejections off of this level, because, we just don't know exactly. Again, you could, eventually right now, let's say we do get some rejection here. You could say right here, we have what's called a hidden bearish divergence. This is not, by the way, this is not printed yet. This is only a potential thing. If we get a rejection and a couple of bearish candles, then obviously we've made a higher high in the RSI, but a lower high on the candle formation. That would signal a hidden bearish divergence. That would mean that we are actually just going to probably continue the trend down. And that's when we could end up, approaching lower price targets. And what do you know? Look at this right? I've been saying that 14,000 could be the bottom. And look at this perfect Fibonacci. You know, if we do get a retracement here, we come down 14,500 on that fib level. So if I'm right about where the bottom is, which again I talked about in scenario 1, we very well could have bottomed, and that's why I've been still buying Bitcoin at these levels, because I don't know for sure if it's going to go down to 14. You know, it could not. I will be buying as we go down, and again, if we do break below this level here, I think we'll just see almost an immediate. There's so little volume that has been traded around those levels that I think we'll see just a very quick move, very quick, maybe even $1,000, $2,000 move down very quickly if we break this low right here. But again, potential double bottom, right? Made a high, you know, we've started this new bullish trend basically, where we've got a high and now we've got a higher high. And if we were to pull out the Fibonacci levels for that one to see, hey, what is the potential, you know, if this is the bottom, what would be our next level? Oh gosh. We are not going to go auto on there. As you can see, we came down, we actually broke below the 236, which is kind of strange. It doesn't actually look all too fantastic. I wonder if on the weekly it looks different. Sorry if charts are a little messy. I'm going to hide this real quick. I mean, you could say technically, right? We have our candle close bottom right here at the 236, and yes, we did break below, but we're still above it. So actually, if you look on the weekly candles, it actually does look like a kind of a perfect bottom at the 236, because we did get, you know, candle close. We got wicks below it, but we got candle closes right at that 236 level. And so if that's the case, then our next price target would be all the way up here at $30,000. We would have made this nice W pattern right here. In fact, let's even see, this is really out in the future, guys, but let's say we were to make a W pattern here. Let's just see if we get confluence with where we would end up. Oh, come on now. Oh, okay, so not too much confluence there. Again, that's kind of right in the middle there. Not at the 1618. That would obviously be a great, you know, place to take some profit if we did get below. But then again, you can also, so another way that you can do these W patterns, kind of seen it done both ways. You actually take this, and this might give us the confluence we're looking for. So you sort of take the neckline and whatever the long kind of leg of this guy, you could kind of either do there. I'm gonna use the wicks. All right. Kind of same thing, right? We take our same kind of level, and then we put it, let's say the breakout was here, right, or even here. As you can see, that changes the price target a little bit. So that's a more conservative one to do. But sorry for that messy chart. I'm going to jump back on the bigger chart here. All right. So let's jump down into the shorter time frames. As you can see here, look at that beautiful W pattern playing out. That strong 4-hourly close, 1-hourly close here, but it did close on the 4-hourly as well. So when this was closing, this was only a couple minutes to close. This is when I actually put in a long position, because it was like that strong of a candle, that far over, right? This isn't just like, oh, we barely like wicked above, right? This is a strong break of the W or cup and handle, strong close, 4-hour, and of course we got some really nice follow through, and we're continuing to see follow through right now. However, I'm waiting, because again, we could just be here to sort of take liquidity from these areas, right? People had stop losses here that got, you know, wrecked. Take that liquidity, maybe get rejected off that 382 that we've been talking about, and then rotate back to the downside. So that would be kind of another scenario, right, that could play out. We could just be here again, grab some liquidity, reject from the 618, and continue the downtrend. So be cautious here. We already pumped quite a bit. I'm kind of waiting to see some sort of resistance, or again, just scalping maybe some longs here, depending on a couple different factors. But the other major thing going on, of course, that's the catalyst for this is the DXY. And I've been showing you guys, obviously we've been in this bullish channel on the DXY for a long time, which is why we've seen, Bitcoin and other assets just go down and down. However, within this bigger pattern, we do have this falling wedge that nicely broke down, retested, and is actually continuing to break down further. And I'm going to hide this real quick so it does not, we can kind of look a little bit more closely. Oh, we got an alert here, and we can see that we broke below the 200 moving average pretty significantly. And again, the price target for this falling wedge would be at the bottom of the wedge. So, you could potentially take, profit a different area, one there, one there. But the potential, is all the way, I'd say, down here at 107. So we could see a, decline on the dollar here temporarily. Again, we would eventually, come back down, maybe even back down to the bottom of our channel potentially, right? In which case we could still see continued upside for the dollar. But for the short term, it is looking good for a nice rally on Bitcoin and other risk assets, because the DXY is, pretty textbook. Break from falling wedge, retest, and is now cascading down. So, of course, we will get, moves up and down and up and down. But I do think we are headed down for a little while here on the DXY. So definitely looking for long positions on those risk assets while the DXY is doing its thing. Here's how it looks on a nice bright white chart, if you're into that kind of thing, which I kind of like to switch back and forth between them. Keeps it fresh. But we already broke back above our consolidation pattern here, which is kind of crazy. It's almost like a little fake out, but I don't know. It's interesting to try to call price targets, right? Because we already hit our main target here from our W cup and handle. So now I'm assuming we will do, we will consolidate in some other fashion to then, figure out what we're going to go do next. Because obviously we've got this, one of the things we could do is we could take this trend line here and we could extend it out, because there's a decent chance we, come back quite a bit to retest this now. This trend line is pretty crazy. So if it does come down here, definitely want to look for buys, because that angle of that trend line is very, very strong. So if we do come back, which is very possible we do, because we're very far away from a lot of our moving averages right now. And again, it wants to come back to the 200. It's like a magnet. So I do think, see some retracement here in the short term. But again, as long as the DXY, every time the DXY gets some support and goes up, Bitcoin will retrace. But I still think that the target for the DXY is much lower. And we are getting some support from the 200 smooth moving average, which is a little different from the 200 moving average. We are getting a little bit of support here. So again, possibly come up, reject off the 21, and continue down. So in the very short term, you might want to look for, like on the very short time frame, look for some short positions on the very short time frame. But on long term, I think we're good to go here on Bitcoin and risk assets. That's why I went ahead and bought more Bitcoin, and we are cooking here. So it's exciting to see crypto finally making some moves. However, there was some other news today about some people in the White House want to ban Bitcoin mining because of the energy that it uses. And I talked about on my last video that the Bitcoin is extremely efficient. The way that miners operate, they really use a lot of excess renewable that normally gets wasted. They have been actually using that, the runoff of that they would have to let off anyway. They're actually using it to mine Bitcoin, and then they can turn those Bitcoin miners off if the grid is getting too stressed. So there's a lot of customization within Bitcoin to say, hey, we're getting a lot of renewable energy right now, a lot of wind, a lot of sun. Okay, let's turn the miners on. Let's profit off that energy that would otherwise get wasted, that they would have to just let off, right? Because that's what happens if there's too much electricity and it's not being used at that time, then they just let it go into the ethosphere. It disappears. It's wasted energy, basically. So now you have miners, and so now you can say, hey, let's turn these on. Okay, let's absorb all that excess energy. Let's profit off of it. And then, hey, the grid's getting too stressed. Okay, we can just turn them off temporarily until the stress goes away. And so it's very customizable in the way that you can, work it. And of course, Bitcoin miners are trying to find they understand that it requires energy to mine Bitcoin. So they're finding the most efficient ways and using the profits that they get from mining Bitcoin to make their process more and more and more efficient. And so if you look at how much energy is actually using versus, let's say, mining gold, for example, or other industries, it is way, way, way less than any of these other industries. It is one of the most incentivized to be efficient industries. And at the end of the day, guys, it does use energy, but there are things that are worth energy. There are things that are worth it, right? At the end of the day, you could make the case that human beings, we emit this carbon, so we could kill ourselves all off, and maybe the world would survive according to certain people because there'd be less carbon or whatever. But at the same time, are we worth staying alive, right? There are things that are worth obviously emitting carbon or using energy for. And I would argue that Bitcoin is absolutely one of those things that, does it cost energy? Yes. But is it worth it? 100 million times yes. Because it's real currency. It's real money, the way that money should operate. And it's very freeing for people to be able to not have to worry about their currency being inflated to nothing and having their savings just vanish into thin air, right? No one deserves that. It's not the way currency should work, in my opinion. Bitcoin is the way currency should work. Limited supply, accessible to everyone. You hold your own keys to your own wallet. No one can say, oh, sorry, we're the bank, we're cutting you off. You can't have access to your funds you placed here. Sorry, too bad. So sad, right? You have your access. You are, no one can take it from you unless you give them your seed phrase. We need that kind of money in today's world with hyperinflation going on worldwide. So yes, it is absolutely worth every dime of energy that it costs. But the reality is it is extremely efficient, and the incentive model is to be very efficient, unlike in other industries where the incentive model is not to be very efficient with energy. So absolutely worth every drop of energy that it uses. Guys, that is your Bitcoin wrap up. We could quickly check on Ethereum is looking very nice right now. We should probably look on a different time frame though, because it's a little bit hard to kind of see what's going on such a short time frame. Pumping all the way up to 1,700. I actually, over this last 3 months, I have acquired quite a bit of Ethereum as well, mostly into NFTs, which are kind of NFT bear markets. So I probably still lost some ETH at the end of the day, but I still have my ETH sitting in Coinbase that I staked a long time ago. So hopefully I'll have access to that soon once the merge happens. But as you can see, Ethereum is following right along with Bitcoin. It's actually in its own falling wedge pattern here that it kind of broke out of. So very similar to Bitcoin, except its falling wedge was a little more of a cleaner breakout, it seems, than Bitcoin's looked a little strange. But this one, which of course I don't have drawn on this chart, obviously, but, well, not obviously. I wish I would have had it drawn. Oh, there it is. Yeah, boom. So, hey, isn't that, look at my old drawings there. That's kind of funny. All drawings were actually kind of correct. Interesting. Yeah, so it's pumping. And again, it could hit some resistance here, but we will see, guys. So keep an eye. Again, my bias is long positions in the short term up until we get to that resistance line at around 21,000. And that's when I am turning bearish because we could see a rejection down. However, if we break that level, retest, then I think we are off to the races, and I think we'll eventually get back up to our previous trend line here before determining whether or not we continue this bear market, because we still got some months to go, I think, before we fully bottom, but I could very well be wrong. This could have been it. There are a lot of people calling for that right there to be the bottom, and I would not be surprised. Guys, as always, make sure to save your money, grow your money, make sure to buy some Bitcoin, because we all know that fiat currency is the ultimate meme coin. It's going to go to zero. It's a debt-based system right now, and literally the government is buying its own debt with printed dollars. So you can only imagine how long that will last before goodbye, House of Cards. See you on the next one.